Welcome back to the channel, folks. As the stock is trying to break $1.1315 level. This is our supply level, and if you have been following me, you know we've been tracking the supply and demand level from a long time now, and these levels are working beautifully. If you are looking to make money, again, it's not financial advice here, but again, I'm not stopping you from using these levels. That they apparently are working, and I'm pretty confident at the end of the day, market does work in its own way. It's very volatile. But these price action standpoints do give you a sense, and there is some formation to this madness. And of course, these immediate levels were established 1 month and a half ago, and it's not like something that has been established 1989 or something like that. These are very recent levels, and believe it or not, there's a lot of limit orders that kick in around these levels, and this is why you see stock getting tested and shooting back down and shooting back up, right? Things like that. So let's talk about very first thing I want to point out to you guys that the short interest is now 72%, whopping 72%. At this point, you know, any stock that doesn't have the dilution that Bed Bath & Beyond has, you know, there's a lot of warrants are being built for that, and there's a lot of dilution is happening. If it wasn't the case, right, 72% is like a rocket to be launched at that point, right? But we have a little bit of a problem, as I've been making daily videos, and I'm telling you guys that there's a lot of inventory sitting with Hudson Bay, and of course, from financial standpoint, as I said yesterday, the stock is not going to survive this whole endeavor, and so I think they were trying to get their dollars right. And this is eventually, the stock is definitely going to go down. But let's take a look at cost to borrow, because that's also very interesting. Right now, the heavy shorting is going on. Cost to borrow, for the new folks, what cost to borrow is when the stock is not doing great and the price is steady coming down. There are stocks, you know, being borrowed from the broker and sold in the market because they know the price of the stock is going to come down. So let's say they buy the stock at $1 from the broker. They know the price of the stock is going to go down to 20 cents. When the price gets to 20 cents, they buy back the share from the market. And now they have this 80 cents of profit right there, right? Out of that profit, they give the fee, whatever the fee is going to be. And they design the fee. There's a different structure to the fee. So they give whatever fee they need to give, 10 cents or 12 cents or whatever the case is. And they'll take home the profit. Now here, look at here, what happening here. 7:15, there were 600,000 shares were available. 7:30, it got down to 200,000. 9:15 was 200,000. 10 o'clock, 75,000. 10:15 is 70,000. And 10:30, it's 20,000 shares left. And then what the broker is going to do is going to refill and is going to bring up the inventory so other people can borrow the stock and sell it in the market. So this is also some consideration is there as well. The stock goes up because of that as well. But again, as we said, right, the price action moves in a sort of a zone. It doesn't move in a single line item. Even though I have $1.13 here, you could give it a take, 2 cents up, 2 cents down. So this thing can happen. It doesn't have to be exact that is going to come to that exact same level. Sometimes it does, sometimes it doesn't, because again, you have real people trading, and there is a possibility that one trader can throw off the price action level. But this is why we go off of the zone. So it is in the zone right now. Let me zoom out for you guys and show you guys what's happening right now. As I said, if you've been watching me from regular, you know these are the levels that we have. If you know here, this was a demand level, right, a few days ago, and now it became the supply level. And look how hard it is for the stock to cross this, even though there was like almost 4 million shares were bought during this period, you know, but then again, it could not cross it because there's 6 million shares were sold right after that. So there's a lot of profit taking happening as well. And of course, short selling is along with that. So these are the levels here. New demand level is established right now. If it crosses this demand level, $1 is heading down, guys. It's heading down to 88 cents. Again, this level was established in 1992. So just, you know, I mean, I'm just trying to make sense of this, and maybe this is a new level that we're going to reach to, but it's definitely, if it crosses $1, it is heading down, guys. And let's take a look at the supplies now, right? I mean, I've showed this a couple of times for my regular viewers, for the new users. Look at this. We started off with 177. $1.77 was, believe it or not, was a very hot level. It was like, I thought that it was going to take off from $1.77 because it was touched so many times that I almost felt that, you know, the short interest was like 40% or 50% at the time, but it started steady coming down because of the dilution. They started giving the equity offering at that point, and equity offering killed everything, right? At that point, you know, these guys, whoever bought the equity offering, bought it so cheap, they start selling the stock in the market, exercising these warrants. And of course, once we find out that there is a lot of dilution, it sort of kills that momentum, that short squeeze. So, I mean, in my opinion, short squeeze is kind of far off right now. Again, but anything can happen, right? You can definitely have these hedge funds let it go, let it fly to $1.77 again. But for now, it is retested. So this is for today. If you're new to the channel, do consider subscribing. I'll talk to you guys in the next video.